Everyone knows a Black Swan event is inevitable, but when? You came here for the truth, so let me unveil that for you. Today we're going to look at some of the insights around what's happening with the potential for a Black Swan event. First things first, we got to talk about the Fed. The Fed is central, the Fed is key, and obviously I want to point out some updates around what they have said. Number two, China. We need to look at what's happening there, which is different from the United States today. And number three, we're going to look at reflation and all that surrounds it. I've got a lot of that and more. Let's go. Okay, so I wanted to start with this. We are looking at the so-called Black Swan Index, the skew index. I covered this recently, maybe about 2 or 3 videos ago, and I'm not going to, of course, go into depth because I did in that previous video, but I want you to know what's going on, and that's going to bring me in to the next piece of information, okay? So opinion, what the stock market's Black Swan Index hitting an all-time high tells us. And essentially, they summarize it here. It shows disagreement among investors, and that is particularly wide at this time. You see, if you have a consensus here like we did in 2017, then it's kind of easy to figure out the situation. 2017, month after month after month of consistent gains in the stock market, consistent gains in basically everywhere you look, not just in the United States, but central banks were easing like crazy, and that was persistent and pervasive all over the world. Then we got to 2018, and as soon as February hit, it was looking terrible. And it was basically the polar opposite of 2017 in many ways. But now today, things are kind of skewed, pun intended. You can see here in late June, the skew index hit an all-time high. That reading was more than 40% higher than its average since 1990. Okay, you look even further. In June, it was 20% higher than the highest the skew reached during the US stock market's February-March 2020 waterfall decline. Think about that for a second. Right now, today, it's even more intense than we saw February-March. And that decline was literally, as they describe here, a waterfall. So we've got to watch out what's happening, but in many cases, what I think is that when the markets get really hot, many investors simply bet that the market is going to fall. They use it as an insurance policy. So they're fully invested. It's not as if they sold. This is the misguided and ignorant, people who they're uninformed, okay? They think that means, oh yeah, you're saying that everybody's selling their stocks and now they're betting on a crash? No. And when I see that sheer ignorance, it just doesn't make any sense. But anyway, you got to understand what this is. It's like buying insurance, okay? That's what it is. Okay. Now, I'm going to show you the chart here. You could see it right around an all-time high. We've come down, of course, from the peak. But I just want to show you that there are risks today that investors actually do see. And you know what else is a risk? Not being on the insiders. That's right, the insiders is my way to connect to you. And this right here is basically where I will email you 5 times a week. I'm going to give you the video of the day. And what this will do for you is be able to have a channel directly to me. There are approximately 5,000 people that have already signed up, but we have to get this to 10,000 ASAP. So sign up. I'll put a card right up here, or sign up for free at themoneygps.com. Look, we're going to talk about this because you can see the Federal Reserve, and what they are consistently mentioning is that we're going to talk about the taper. I think it's like 5 or 6 levels of talking about. But anyway, Fed officials saw progress towards taper move according to the meeting minutes. Now, the market heavily relies on what the Federal Reserve says. And does, of course. Officials uncertain on inflation outlook amid upside risk. Of course, there's a problem there, and they were actually mentioning that publicly, or at least closed doors, but they know if that information becomes public. Officials split on tapering mortgage-backed securities faster than treasuries. And I think they've got to do both personally, but that's just me. The committee's standard of substantial further progress was generally seen as not having yet been met, though participants expected progress to continue. Various participants mentioned that they expected the conditions for beginning to reduce the pace of asset purchases to be met somewhere earlier than they had anticipated at previous meetings. Could that be, could it be that inflation is running hotter than what they are, number one, admitting and showing, but that they expected based on their public, actual admissions? Oh, obviously. So, of course, this is what we got to deal with. But look at what the Federal Reserve has done over this period of time. I mean, this is their balance sheet, and you could see it is over $8 trillion. They don't seem to be concerned about it up until this point. You just printed trillions. And I mean, think about this. Just over a decade ago, the balance sheet was a small fraction of where it is today. And another thing, of course, is the Fed funds rate, interest rate of the United States. And you can see it here, that it is down at a level it will absolutely never be able to come back up from. Now, if I could draw this line here, I just wanted to show you something. If my head's not cutting it off. Looking at this, just imagine for a second where they are going to be able to put this new interest rate hike. Where is it going to go? So who knows when that will be, of course, but they're not going to have room to bring it up to where they were previously. That's the point I'm trying to make here. They are always doing this kind of thing, and of course, it never ends well. Let's admit it. Okay? And this here is just showing us that the job opening stayed at a record high. Now that's bullish. Now that should be telling you the economy is strong. But at the same time, you hear about how many people are quitting their jobs. So the statistics are completely and entirely skewed, and they don't make a single ounce of sense. You can see the job openings here at a new record high. There's something wacky going on. And of course, we'll keep digging. This is the mortgage applications. They're down. Now, there's different reasons for that. If you look at the prices of homes that are being paid today, it's incredible. Also, there was a surge previously, and you saw so many people that were getting into homes, and I think that was sort of taking from what we see today at this time. But at the same time, inventories are low, you got the prices are high, you got construction costs, so people feel, well, if I'm going to buy an older home, then I got to do a little bit of construction. That's going to cost twice as what it was before. Maybe we'll hold off. There's a lot of uncertainty today, right? And then this one here, the IMF, they're talking about, and it's important to acknowledge, number one, what the IMF does. They go into a country and they ruin it. That's the whole point. But they're just saying, is the IMF repeating its mistakes on the global financial crisis? And they say, look, to summarize it for you, they're doing the same thing as the United States. They're suggesting that, interest rates can remain low, and you don't have to give up on the money printing, and you don't have to give up on the stimulus spending, because now's not the time to do that. Don't worry, inflation is temporary. And, at this point, we need to understand that a lot of the activity that we see today going on with these central bankers and the governments has only benefited the top group of people, not the 1%, not even the 0.1% probably. It's just a few select individuals. The multimillionaire Powell and all of these other people, they are simply minions of the system and the way that they run it, and they are actively trying. If you think about it, if you just take a minute to think about this for a second, different than the government structure, you got the Federal Reserve and the FOMC and all of this business, and you simply take a minute for yourself to consider the possibility that maybe these groups are not working to, the standards that we are supposed to hold them to, and the objectives that they preach are really just there to distract you, then maybe you'll have a different opinion. Number one, we are seeing more risks today than ever in history before. Number two, investors both agree that there's inflation and yet don't. It's a very strange paradox that we're seeing. And of course, they only want to believe what's beneficial to them. Number three, for those interested in, the investor mindset here, we need to be very clear that your assets are best kept, or should I say your savings are best kept in real assets to prevent the devaluation of your currency. If you found this video informative, hit that thumbs up button. There was so much more that I didn't get a chance to do, so I will absolutely post this probably after the next one. It's going to be intense. There's so much I needed to cover here. I'm going to touch on it in another video. It'll be a short one, so stay tuned for that. Hit the thumbs up, subscribe to the channel if you're not already. We need to get this channel up and above 300,000 subscribers and keep pushing that algorithm, and we need to do what we can to support each other, okay? Make sure you subscribe to the insiders as well at themoneygps.com. If you haven't seen this video already, you definitely want to check it out. Click it, and I'll see you there.